Assalamualaikum and good evening to Doctor. We are from Group 8, so today we are going to present about the analysis of SOX Group Berhad. These are the name lists of our group members. So this is our company and industry context for SOS Group Berhad. So it was founded in 2005. The SOS Group Berhad is a major player in MVNO market. So the group principal business has been heavily dependent on the expansion of their mobile services as they provide 1OS prepaid and 1OS black plans. And in the present times, SOS Group is a provider of several services including e-wallet solutions and mobile phone plans. So it also continue focusing on making the mobile plans more attractive and improving the user experience in general if they want to satisfy and keep the current subscribers loyal.
Assalamualaikum warahmatullahi wabarakatuh, Dr. Wazulani and others. My name is Ila Maisara, Betsy Womat Kaniza, and my number battery is 70957. I'm going to explain about accounting standard and policy. First is about MFRS 116, is property, plant and equipment. SOS Group recognized the PPE and recorded the costs included about purchase price, setup costs, tax and import duties, example of PPE, networks and telecom, equipment, office furniture, computer, serve, store or office improvement, and after the recognition is about cost, depreciation, impairment. For the second FRS is MFRS 15 is about revenues. It's 5-step model, prepaid and postpaid plans, system activations, digital service and ads, e-commerce income, and for the revenue types and when it organized is prepaid is about prepaid top-up when used over time, postpaid fee monthly, marketplace income is monthly. And for the third MFRS is 138 is about intangible asset, recognition and measurement for acquired intangibles recorded at cost delivered software platform. It can be complete, will be used or sold, expected to give future benefit. And it includes about software license, internally developed apps, trademark rights, customer database. For the fourth FMRS is about MFRS 141 is about biological asset. SOS Group does not have significant operation involved with a biological asset. For MFRS 140 is about investment property. Investment property for SOS Group is a freehold commercial properties held to earn rental income and capital gain using cost model and depreciated over 50 years. For the last MFRS is MFRS 137. Provisions are recorded when there is a obligation payment likely. Amount can be estimated, like a legal claim, of contract warranties, contingent liabilities disclosed in notes if costs may rise. Thank you.
Okay, let's take a look on disclosure of non-current assets. This company SOS Berhad discover property, plant equipment, PPE and intangible assets. Okay, let's take a look on PPE first. For the categories, it have a cash purchase, finance through lease arrangement, motor vehicles, lease properties, lease signboard, depreciation of right of use assets, interest expense of lease liability, and short-term lease of premise and office equipment. Then for nature, it is physical asset that used in the operation of the company, and for production, it is not for resale but for internal use only. Then for long-term useful life, it is typically provides value over an extended period. Then for recognition criteria, the assets must be probable that it will generate future economic benefits. The cost of the asset must be reliably measured, and assets are recognized when these conditions are met. Then for measurement methodology, for cost model, it is measured at cost less accumulated depreciation and accumulated impairment loss. For the depreciation, it uses the straight line method or estimated useful life, and impairment loss are recognized if the recoverable amount is lower than the carrying value. Then for intangible assets, for the categories, it have capital work in progress, telecommunication software, mobile application software and trademark. For the nature, it is non-physical asset and it is capable of being separated from other assets, and it is not for resale. It is used for business operation only. For the recognition criteria, it must be probable that future economic benefits will flow to the company from the asset. The cost of the assets must be reliably measured, and the asset should be identifiable. For the measurement methodology, for under cost model, it is measured at cost less accumulated amortization and impairment loss. For the amortization, it is amortized over the useful life based on straight line method, and intangible assets with indefinite useful life are not amortized but tested for impairment annually.
Assalamualaikum and hi, my name is Nur Najwa binti Mat Zahid with metric number S70654. So now, I'm going to present to you guys for the part 4, which is the economic environment and asset valuation for SOS Berhad. Okay, now at this slide, as you guys can see, there's a key of non-current assets title, which is here I put the table with a few data from the annual report. So, as you guys can see, there is a property, plant and equipment, intangible assets, investment in subsidiaries, investment in associates, investments in a joint venture, other investments, goodwill on consolidation, amounts due from a subsidiary, deferred tax assets. So, as you guys can see, I'll do some comparison for year of 2023 and year of 2024 amounts. And there is a change for the comparison of those 2 years, and there's a percentage change for those 2 years. So I have put a note below the table, which is assets like property, plants and equipment and intangible assets are typically held at the subsidiary level and thus primarily appear in the group's consolidated financial statements, not the parent company's standalone statement. So, how the economy shapes SOS Berhad's assets? The ever-changing economy, with its ups and downs in prices, borrowing costs, and market moves, directly affects how SOS Berhad handles and values what it owns, especially its important investments. First, inflation, the rise in prices, subtly chips away at the future value of money. This means SOS Berhad has to project higher earnings or adjust its calculations when valuing its investments. If its subsidiaries face higher costs for things like internet equipment or staff wages, their profits might shrink, which then impacts how much SOS Berhad's investments in them are worth. Also, high inflation means buying or replacing big equipment for these subsidiaries will cost more down the line. Next, changes in interest rates directly hit SOS Berhad's wallet. When interest rates go up, borrowing money for new investments becomes more expensive. This makes SOS Berhad think harder about whether new investments are still worth it. Higher interest rates also mean that future earnings from its subsidiaries are worth less today, potentially forcing SOS Berhad to re-evaluate their book value. It also makes safer options like bonds look more appealing, making SOS Berhad weigh its choices carefully. Then there is market volatility, or the market and unpredictable swings in the stock market. When markets are choppy, investors might become hesitant, making it tougher for SOS Berhad to raise money from new projects or to invest more in its existing companies. A shaky market can also make people think the company's investments are worth less, leading to a recheck of their value, most notably the complete disappearance of goodwill from the company's book. Signals that the economic bumps in the road have made those bought-out businesses less promising than initially thought. In short, SOS Berhad isn't just sitting still. It's actively managing its assets and adjusting their values, especially when it comes to its investments, all while keeping a close eye on inflation, interest rate, and market swings. It's about staying realistic and smart in a constantly moving economic world. So, in this slide, we were talking about strategic adjustments and revaluations made during the year. The year's financial report highlights clear strategic adjustments and revaluations, reflecting a proactive response to economic conditions. Firstly, a significant increase of RM37.15 million in investments in subsidiaries signals a deliberate move to either acquire more equity in existing businesses or invest in new ones. This strategic decision aims to consolidate control, capture more value, or expand market share amidst economic uncertainties. Secondly, a rise of RM44.18 million in amounts due from a subsidiary indicates direct financial support from the parent company. This injection of funds likely addresses operational needs, supports expansions, or bolsters the subsidiary's financial resilience during challenging times, safeguarding the overall investment. While direct asset valuations are not explicitly detailed at company level, investment values are adjusted through impairment assessments. These assessments are directly influenced by changing economic assumptions, effectively aligning asset values with current realities. Most notably, at the group level, the elimination of goodwill on consolidation from RM8.89 million to nil represents a critical impairment. This revaluation stems from a risk assessment of previously acquired businesses' future prospects driven by a less favorable economic outlook and operational challenges. In a sense, the company strategically invested and supported its entities while realistically adjusting asset values, particularly goodwill, in response to the prevailing economic climate. So that's all from our group. Thank you.
Next is return on assets. Return on assets we can get from net profit divided by average total asset. So the net profit is 59039,251 and the average total asset 19191347, and we got the divide amount is 2.7. This means that for every 1 ringgit of assets, SOX Berhad earn 2.7 cents in net profit. So the interpretation is while the company is generating strong sales from its asset, the profitability remains relatively low, as 2.7% return of asset is modest and may point to high operating costs, slim profit margins, significant reinvestment of financing needs in subsidiaries or digital venture. And lastly is possibly increasing depreciation or amortization affecting net income.
Next is graphical comparison key non-current asset trends. Investment in subsidiary. The substantial increase in investment suggests that SOX Berhad strategically inject more capital into its subsidiaries. This could be for business expansion, entering new digital or regional markets. Second, strengthening control over key operation. And the last one is supporting subsidiaries during economic challenges or in preparation for 5G rollout. Next is graphical comparison key non-current asset trends. Among due from subsidiary, this sharp increase shows that the parent company provided significantly more funding or financial support to its subsidiary. Possible reasons include covering operating costs and capital expenditure, temporary working capital needs, funding new projects of service such as mobile platform or marketing campaigns.
Next is external view, strategic move and market perception. SOX Berhad expansion into digital advertising, mobile fintech and sport marketing, football club ownership aligns with its non-current asset strategy. Market analysis on digital forums like DH and Bursa Marketplace view SOX diversification as bold but capital intensive, hence justifying the increase in intercompany funding. Additionally, macroeconomic factors such as rising inflation and OPR heights pressure valuations. This stress test affect not just the carrying amount but also the impairment revenue assumption, discount rates and expected useful life is of both tangible and intangible assets. Next is strategic impact of accounting choices. So first is conservative models. Cost base for PPE and IP provide fiscal stability but may understate asset potential. Next is no frequent fair value remeasurement, mean less volatility in reported earnings but possibly outdated asset value. And strategic funding to subsidiaries, which is 4.18 million, reflects confidence but raises a question about internal liquidity and dependency. This analysis demonstrates how SOX Berhad financial reporting under MFRS framework support its strategic direction while navigating economic turbulence. The conservative asset treatment prioritizes reliability but may limit transparency regarding growth potential.